Folks, as you're coming in, if you can see my screen, if you can hear my voice, if you can, there they come. Nico, before I even finished, and raise your hand. We know that we are winning. I see hands coming. Cool. Simon Brown here, as always, joined by Njibule Nzibande with our weekly Follow the Trader. This for 27 January. And links to my site and to villagetrader.co.za, which is in Njibule's site. I'm going to go through some of what's happening on my side, and then we'll go over, as always, to Njibule. I am still sitting in these two local equity CFD positions. They just won't close on me, and I have an absolute phobia about closing a trade in the middle of a trade. I want it to either target or stop, so I'm running them going. What I have done is, in the meantime, I moved some money across into the dollar account, so we've got cash in that, so we can start looking at the indices. What I also went and did was find all the indices that are available on the ThinkMarkets platform, and there's a bunch of them. We've got the Spanish Nifty 50s, India, Hong Kong, France, Brazil, China, Australia. That is the Eurostoxx 50, which is the Euro economies. And then, of course, the ones we already know about, which is Russell 2000, Nikkei 225, which is Japan, NASDAQ, German 30, S&P 500, ZAR, which is South Africa, and then, of course, UK. I have not included Dow Jones. If you've got the S&P, there's no need to also trade the Dow Jones. They pretty much move in lockstep. What we're seeing is all over the place is indices are turning over. So here's the UK. It looks like we're going to get a trigger for a short there. The US ones are still okay. Japan still looking fine, and the Russell 2000 also looking fine. But if I drop down into what do we look? Where's it? Come on. Eurostoxx 50. That is now turned today as well. And what I want is another red day, and then we'll take the trade. Australia looking okay. China looking okay for now. Brazil, this is my turn today. So also it's that green line down through the red line, which is my 7 through the 21. France, a couple of days ago, I've missed it. That one doesn't stress me. Hong Kong looking okay. India, day or two from turning. You'll notice it's taken 5 red days to get India to close. So what we might get, a bit of a bounce, moving averages will move apart again, and then they'll come back together in time. And Spain, again, so France and Spain missed. What you also see is that a lot of moving in sync. So the fact that I've missed Spain and France doesn't stress me, because actually what I'm hoping to catch is Eurostoxx 50, which is predominantly Germany and France. I forget the percentages on those, but those are the two giants in terms of the weighting is going to be France and Germany in that particular index. And I'm not sure, to be honest, if it now includes or excludes UK. I need to dig around and find out and see if it does or it doesn't. So those are the indices I'm looking at using my 721. I went and did the digging as per Njibule's suggestion of last week, of if I get stopped, and let's pick one where I think it would have happened to me. Yeah, so there on this index, so this is the Russell 2000, would have been a buy on 3 November last year. Most of these indices triggered buys on 3 November. So this index actually kept me in the whole way through. I want to find one. There we go. So Germany triggered my buy. There's my entry. Closed below the 21 would have kicked me out. And if I used that as my re-entry, in other words, back the price back through 7. And what I'll do is on my re-entries, I will reduce trade size because I've got less wind at my back, so to speak. I've still got the moving averages in the right position. I got my 7 above my 21. And now price through the 7, giving me that point back, and that worked fairly well. I mean, we get stopped at that point there. So Monday we're getting kicked out, but we're getting kicked out all over the place. There as well, Monday in the UK, we would have got kicked out. There was a fair bunch of weakness. Oh yeah, end of December. That's when we saw a fair bunch of weakness. The one key thing, if I'm in the US account, and let me log into that, is that I can do. So there are two things to it. The first is I got to work. So if I'm entering into this right now, let's say I'm taking my short, my stop is 6675. That stop will move in time, but that is a close above through my 21 moving average. And it tells me that my pip cost is $14 US. I want that as price, not as pips. 6675. So risking $14. I need to manage that in terms of position size, but I can do fractions of the index, which makes life significantly easy. I don't have to do the whole orders in a sense. I can still do my instant execution. I can do pending orders. More importantly, I can also do take profit, but this is profit on you exit on stop loss. This is classic, back to what I like most, which is trend based. So my stop is fixed and my stop will move. In essence, I need to update that stop pretty much every day. But once, you don't practically, you need to keep an eye on it, and then come back and say, right, need to redo that, need to make sure that the stop is in the correct position. So a lot of Europe looking quite particularly weak. America looking, it's okay. I mean, America is not by any stretch. If we look at the Russell 2000, I mean, it's having a rough day, but it's not, not turning in a sense. NASDAQ, same story, not turning, and S&P having a red day, but not end of world. But the Europeans, there we go. Germany looking to turn in a day or two. South Africa looking okay. We'll see how it goes. If what we see here in SA, say we get a giant bounce and we actually jump back up, I take a re-entry, but I reduce my risk per trade to half of normal risk per trade. Question for those two. Yeah, so my telecoms are, this was not my original. My original was, I can't do that and that. So come on, give me some controls. That was my original. There would have been my entry. Yep, back there, early November. Is that a daily chart? Yes, it is. And it's pretty much, I mean, it's gone sideways. It's almost gone back into a zone again. Standard Bank, you can see there was the box, there was my break, there was my entry candle, and since then just gone sideways. If I look at them, Telkom, $300 in profit, Standard Bank, $500, sorry, $5 in profit, and both of those excluding the swaps. A lot more swap cost on Standard Bank, more expensive share by a factor of 4, and increased quantity, a decreased quantity by a factor of 3. So swap on Standard Bank is costing me a little bit more. Haven't had dividends on either. Standard Bank results will only be out typically 16 March for the year end. So dividend will be a little bit after that as well. So I'm going to leave those two trades. When they both closed, I will then take the remaining cash here and move it across into my USD account. Interestingly, when I was doing the transfer, it said to me 2 transfers that I can do, and I've done one. I've got one left. I need to check with ThinkMarkets. Is that 2 transfers in the life of my account? Is it 2 per day? I need to find out more about that. At this point, I don't know. But I'll park there. Njabula, I'll hand over to you, sir.
Evening, ladies and gents. Actually got stopped 3 times this past week. Starting with Discovery. I had my stop around that 131-ish level. I got stopped on the candle there at I got closed at 128 there, but I'm still bullish on Discovery. It looks like it was just coming back to test the 200-day, and if I, yeah,
Jabula, we're not seeing your screen. I think we.
Ah, my bad, my bad.
Jabula, I think we're still seeing my screen
Should be coming
towards
soon.
the end.
Let me try again.
There we go. Cool.
Oh. So yeah, I'm still bullish on Discover with this falling wedge here, looking for a breakthrough this resistance line there. But at the moment, got stopped waiting on the sidelines. We'll see what happens. And my stop will be just below the 200-day exponential moving average, below that 123, around that 123 level. I got stopped again on Sabanye on that break there. I was actually anticipating another break on the upside. It's been a tough couple of days in the South African equity market. Things just breaking.
Yeah,
lower.
there's a quite a giant seller in Sabanya. The theory is that it's out of New York, but they've been selling for a bit and they've just suddenly got aggressive this week.
Yeah, and they took me out of the trade. But if Sabanya comes back to break that 64 rand level, I'll jump back into that trade. I'm not overly stressed about being stopped out of positions. And similarly, I got stopped out of this bull flag. I had my stop just below that low of the flag there around 622. I got stopped today as well. So, but African Rainbow still hanging on. But I wouldn't be surprised if I get stopped tomorrow. But I still would have salvaged a huge chunk of the of profits on African Rainbow. But if we do break that 303-ish level, I'll add into the position or re-enter the position as the case may be. We'll see over the next couple of days. But I wouldn't be surprised because we're bitterly close to my stop loss at the moment. One that came bitterly close from stopping me out is BHP. Came with it. Came quite close. That was quite close. See the low was 14.1952. So about 3 rands away from being stopped there on BHP. That was quite close. Trade is still in, but Capitec looks rather good with that ascending triangle pattern there. Came back to test it there as well. And if I add in my 50-day exponential moving averages, you can see how there's support there with that doji. Someone calls it the kangaroo tail. Tiny one, but still looking for the breakthrough, that 1480-ish level. Clicks broke through the trend lines, the uptrend channel support. Wouldn't be surprised if that holds there, because it seems like we've had quite a few lows around the 260. But if it holds and comes back to break the 277-ish level, that's where I'll be looking to pull my stop to next, around perhaps just to give it a tiny bit more room around that 258 level below those lows there. But looks like still holds its support. But I don't like throwing support or resistance on the highs of prices, rather on the closes. But it, looks like there's still buyers around that 260 level. I entered Coronation on a retest of that break there. Still holding outside of the what's this horizontal resistance level. And if you jump back into the weekly, that's a very nice head and shoulders pattern that broke there through that 46 rand level. And I think once we close above the 200-day exponential, the 200-week exponential moving average, that should run properly as well. And my trend indicators, the 60 just crossed I mean, rather the 30 just crossed the 60 on that trade there. The still looking good. Came pretty close to my stop loss. Let me jump back to my daily charts. Came close, but the 200-day exponential moving average came to my rescue as it held as support. I'm looking for a break higher before I can move my stop to below that the 200-day exponential moving average. I'm trailing it behind me as the distill. Perhaps once the lockdown regulations has been relaxed, distill will start to run as well. DRD still holding, still making higher lows. We'll see what's going to happen. Broke through the 200-day exponential moving average. We'll see when it goes back to retest, either it breaks through or comes back to, um, it'll hold as now resistance and eventually stopping me out of the position. Yeah, as you imagine, man, the resources stocks have been taking a hit over the past few days. But I'm still not stopped on the trade. My stop loss is at break even for my initial trade, and I'm just below that low there, around at 146. We'll see how that rolls out over the next couple of days. Fashini, my longest serving member of the portfolio, tried to break but came back. We'll see how that goes. Still, trading in that channel, and the 30-week exponential moving average looked like to have turned as well. I'll start to look into adding to this position what these two have crossed. Let me just get rid of this. This is Harmony. Entered on the break. They came back. That seems to have been a false break on Harmony, but I'm still not stopped, and my stop loss is well out of traffic, below the low of that support level. There, still looking for a break through perhaps that 73 randish level, and hopefully a close higher than the 200-day exponential moving average. If this would load. Impala as well broke through the support of the uptrend, but my stop is still well out of traffic. We'll see if I get stopped or it starts to turn over the next couple of days. But I wouldn't be surprised at this moment, the way the market is moving, to be getting stopped all over the place. Similarly with Mondi, it looked like it was going to break through yesterday, traded above that resistance level of the bull flag there, but today just came straight back down, as the market was bleak today.
Yeah, but still in that range, eh?
Yeah,
Sticking in.
yeah. And multi-choice is still muddling along, going nowhere slowly. I'm still waiting for that breakthrough, that 142 level, at which point I'll probably look to add into the position with probably a stop higher, depending on price action as that break comes. But if it breaks low and stops me out, that's cool as well, I suppose. Northern Platts, looking like it's going to stop me out relatively soon, but we're still in the trade. Stop loss still well out of traffic, but this is an adjusted stop. Initial stop was below those lows there. As it moved higher, I pulled my stop, but I'm still looking for a breakthrough at 217-ish level, at which case I'll add into this trade. The RMB sellers still haven't gone anywhere around that 77 rand level. Every time it gets there, it looks like there's a big seller just pushing the stock back down into this range. Still looking for, and this time over the past 4 days, including last Friday with that bearish engulfing candle there. Um, the sellers have pushed the price even lower than it had that prior week. I suppose making a new couple of weeks low. And I'm still on my Citrix. The price has reverted back into the 15-day exponential moving average. And if we see a bounce and it crosses back higher than the 15-day exponential moving average, I'll again look to add into this position. But my stop is currently still sitting around a close below the 30-week exponential moving average, which is just a close below that 57 rand level. Once if we get a close below that, I'll exit the position. But if we see a bounce and then perhaps a close higher through that 15-day exponential moving average, I'll look to add into that trade as well. Yeah, transaction capital has been stuck into this range. So I entered on the prior range. Now it's stuck onto the second range, and hope perhaps if it breaks through that 26 rand level, I'll add into the position, and perhaps it will get stacked onto the next block, and hopefully I'll just pyramid and trail my stop over the blocks as the case may be. A couple of trades that I'm watching closely is ShopRite. Perhaps the results will even be a springboard into remove 15-day. Still looking at that cup and handle, targeting the 267 back, looking to take the trade back to the 267-ish level. Yeah, but the cup and handle looks good, and the breakthrough that bull flag looks even better. But the reason why I hesitated or didn't entertain this break here is because of that resistance level there. There's an obvious resistance level quite close, so I just wait for that to break first.
Yeah,
break through that 150.
That update. They've always updated on the 22nd, which was Friday. It's going to be any day now. There'll be an update coming out from them.
Yeah, we'll just be waiting for that. Interestingly, when you look at Mr. Price, is another one that I'm looking at quite closely. As you can see, the 30-week exponential moving average is looking to cross the 60-week exponential. They're very, very close from crossing. And if it does close through the 175, it would have closed through the 200-week exponential moving average. And that's some proper wind at your back if you're entering into that position with a stop loss just below that low there. So looking for a break on the daily chart around that 177 level. Just can now get rid of this. Around break through that 177 level. Yeah, Mr. Price looks very, very good at the minute. And last but not least is Brent Merchant Investment Holding. Got sold off last week, but held at that 200-day exponential moving average. So I'm looking for a breakthrough that 33 rand, that 32 rand, but I'm looking for a close above, above those levels there, which is a 3% higher than this neckline there. So I'm looking because there's a bit of traffic there on that neckline. So I want the price to clear the traffic, and then I'll jump into into this trade. Yeah.
Cool. Some questions coming through. Yeah, some questions coming through. Yes, continue. Yes, share. Yes. Steve, not a problem. And as always, we record. So, folks, if you get stuck, and there was a typo in the email, not a typo. Wrong emails were being sent, but that's now corrected. We put in his videos on Njibula's YouTube channel, and that link is now there. So, if you ever miss, you're welcome to do it. Herman, how do I determine size of position in indices? So in essence, it's the same as anything else, right? And let's go to, let's look at Spain, just for the heck of it. So it's a case of what am I prepared to lose in my portfolio? 2% of the portfolio. How much is that in cash? And then risk, per. So in the case here, what ThinkMarkets offers is diffraction. So it's cost per pip. If I go to a full contract, it's $1.21 per pip. Those pips are the little bits at the bottom, and I need to double confirm that with ThinkMarkets, but note it's pip, not point. Whereas when I'm here, as pips or as price, and I'm always focusing on price. So the pips is on the other side of the dot. But then it's a case of, so let's say I'm taking a full position. Let's say my stop is 20 points away. I'm just picking a random number. I'm risking $1.20 per point, and there's 20 of them. So that comes in at $24. I've got $1,000, 2.4%. So I will drop that to say 0.8, or as the case may be. They're quite happy with that. So then I would take it to 0.8 and manage my position size that way. So it's the same process. It's just that we're looking at points, and then the points have values rather than rands and cents. More questions coming in. Re-entry and halving the volumes. So Mervyn, let's go look at, okay, well, let's look at the Spain here. So remember my logic on this system is 7 crosses 21, which happened on that candle there. I can't see which candle, but let's say it was that one. So my entries at that point, so now I'm long. My stop loss is a close below the 21 exponential moving average, which is that candle there. Now, yeah, they then didn't uncross. So the trick is that even in giant trends, and actually let me rather go back to NASDAQ, because we had a monster trend. That's the trend off the lows, well, since the collapse back in March of last year. We get the buy signal, but now we get a close below at that point there, which stops me out. And then what I would do is I'll say, cool, I'm now out of this trade. I'm no longer in the NASDAQ. Do I get back in? Yes, on a close above the 7, which is that one there, I would have then got back in. But because I'm re-entering into a trend and I don't know how long this trend will go, I halve my position size. And that's the trick I'm trying to do here is you got stopped out, but the trend is running. So you want to try and get back into that trend. Fair enough. I mean, absolutely. But you don't, maybe it's actually coming to that tiring point. So I looked at using something like ADX, which doesn't give you direction. It gives you strength. ADX, I mean, I've tried it over the years and I've never found it viable enough. So when I get back into it, when I re-enter, when it isn't a cross, because you remember on the NASDAQ, the cross was the first trigger. And thereafter, there was an exit at that point there. When I get back in, it's not on a cross, it's just on a trade through the 7. So I reduced my trade size. So instead of doing 2% at risk, I do 1% at risk, and I manage the risk that way. Mohammed, that's what I'm hearing. I mean, so folks are saying that they don't like what Neil Froneman said. He was very bullish. He's saying he wants to retire in 3 to 5 years, and he wants to more than double the company since then. And he thinks platinum is $2,000 an ounce rather than the current one. And some folks are saying, oh, people don't like it when CEOs say that. I mean, be that as it may, the bigger picture is that it's come under massive pressure. And what I've heard from a couple of trading desks out there is that there's been financial pressure. I think people start panicking. More people see it today. And where is Sabanya? There it is. Njabula was showing this chart a moment ago. We see a bit of a top candle there, sell, and then aggressive selling today. The question is, has the selling exhausted itself? don't know. To your question, Mohammed, is this then a buy 55.21? Short answer, no. I don't like buying things that are going down. I would wait for some level of confirmation that it's turned and started moving higher. A couple of folks are asking me to try and explain what happened to GameStop, and I don't have GameStop on this system. They don't. ThinkMarkets doesn't have it. So GameStop is up literally about 1,000% since a couple of weeks ago. So there's a couple of angles to it. Firstly, there are a lot of hedge funds who are short of GameStop. In other words, they have sold shares into the market, and if it falls, they plan to buy back. I've heard reports that actually there was more than 100% of equity that had been sold. Now, in the JC, that can't happen because you can't do naked short. So you've got to borrow a stock. In the US, seemingly you can. And then what happened on the Reddit channel, Wall Street Bets, there was a flurry of activity and folks started buying GameStop. They didn't buy GameStop, they bought the options, and I'll come to the options in a moment. But what that means is that the stock starts to move, and those people who are short, in order to stop losing money, to close their short position, they have to go buy shares. And that's why you call it a short squeeze. So in essence, they're getting squeezed by the price. They then run to the exit and they buy, and that then pushes price even more, takes more. Mohammed, that was a $10 stock. So that's like a 38 bagger in a week or so. But there's another interesting angle here, what has been happening, and we've seen it last bit. The folks in the Wall Street bets subreddit are not buying the stock, they're buying the option. Now, I don't want to get too detailed into options, but let's say I'm an option seller. So I'm selling options. They give you the right to buy the share in a couple of weeks at a price. You come along and you buy those options from me, and you probably pay $1 for those options. And the shares at, let's go, Mohammed, back to last week, Thursday, trading at 16. So you pay $1. I've got to go into market and buy some shares. But that number of shares I buy is, I'm hedging on a delta hedge, and that now depends in the money, out the money. And I don't want to run. Maybe I'll do a JSC direct on it because we start to run down rabbit holes. But in essence, the person, me, who's selling the options into the market, I'm having to go and buy the shares. And as that share starts to run, I have to go and buy more shares. So what you've got is essentially you've got 3 buying pressures. The first is people just buying GameStop normally. Second is people who were short, closing their shorts and having to buy in order to close. And then the third is people buying options, typically out the money options, and that the hedges then, as the price runs, have to buy more and more. So what you get in a particular stock, you need a couple of things. You need it to be massively illiquid, which GameStop was. You need a giant short position. GameStop had that. And then you need a flood of option buying, and GameStop saw that. So, I mean, it's all 3 coming together at the same time. And this is not new. Go Google the Volkswagen Porsche story from around 2012 or something like that. There was a short squeeze there where for a short time, Porsche was the most valuable company in the world by a factor of 5 or 10, and it was similar type of story. So this is not new, but it can get pretty wild in this scenario. Remember that when you are short, your risk is infinite, right? Because when you're short, you lose money as the stock rises, and the stock can rise forever in a day. If you're long, it goes to 0 and you lose 100%, but you only lose 100%. So shorts really get into trouble. Mohammed, do we have options in South Africa? We do. So we have retail options, which is warrants essentially. And if you go to warrants.co.za, you'll find the Standard Bank warrants website. They've got a fair bit of information there, and then we also do have a option market on SAFEX, but the option market on SAFEX is for big hitters. You know, you got to rock up there with $1 million and even then they're going to make you sit in the back of class. So we do have an option market, but not nearly as evolved, was as busy as we see in the US environment. What I'll do is I'll drop it, Mohammed. I appreciate the feedback. I will go and I'll go and do the rabbit hole detail, because folks are doing delta hedging. So at a certain price, you need to buy 50%. The price moves. Now you've got to buy 60 and 70. And it just, yeah, it all just goes crazy. One of the questions out there is this Wall Street bets manipulating the market? I don't think so. I mean, are they acting in collusion? Sure, maybe they are. They're doing it on a public channel, and they're just going and buying. I mean, they don't have inside information. As I think, they're trading within the rules. We've seen it before. We will see it again. GameStop is at this point. I mean, go and have a look at AMC. AMC is apparently having a crazy day on the market as well. Markets are a crazy place, and sometimes crazy things happen. And yeah, some billionaire hedge fund managers have lost, by reports out of 3M Markets, they reckon that the losses on the hedge funds on shorts in GameStop are approaching $4 billion at this point. So there are a couple of billionaires who are poorer than they were a week ago. You find it hard for me to be sympathetic for billionaires. Folks, we'll leave it there. We've run out of time, and I'm not seeing any more questions.
Quick question,
Yeah,
Simon. On the 721, are you going to wait for a confirmation on the re-entry?
Yeah, all I'm going to do for the re-entry is I'm going to use your suggestion of last week, where I will do price through 7. So it goes through 21, it stops me. When price goes back through 7, I'll get back into the trade. But my risk is that I'm towards the end of the trade. And if I go back to NASDAQ, is this NASDAQ 100? Yes, it is. And it's daily. So at that point, I got stopped. At that point, I got back in. And then I'm off to the races again.
Yeah.
And then I get stopped again.
Are you going to add into existing position?
Existing positions at this point, no, simply because it gets way choppy. And what happens with existing positions is that potentially I get massive weightings. I mean, if we look at NASDAQ, and let's roll back to a bit further in time. So I get into the trade there. I would add once, twice, thrice, 4 times, 5 times before I get stopped. So what started at 2% of risk, that trade just starts getting, it can get potentially absolutely giant. Whereas you're doing the lazy, the 15, 30, 60, that has a much gentler and easier process for existing positions. The 721, you're in, and it's concentration. What I've got is mostly in Australia. We got Brazil, we got South Africa. But there might be some risk around concentration. And we've got some Hong Kong. So the real risk is that I've got Spain, France, Germany, and then UK and Euro 50 in Messi. And then I've got Australia, Brazil, China, Hong Kong, NASDAQ, S&P, and Nikkei 225. Because actually it gives me a fairly nice spread across.
Yeah. That's a quite
cool. Ladies and gents, we shall park it there for questions. No. Next Wednesday, 5:30, get sent out the systematic. Yeah, no, it's a lacquer list. But as as I said